Hey everyone, welcome back to Corporate Decoder, the place where we shine a light on the hidden treasures of corporate filings. But sometimes these treasures are more like little nuggets of pure stock market gold. Today we are dissecting a report from 5C Lending Partners Corp, a company that seems to be in a significant growth phase, a phase that involves raising a lot of money quickly. Alright, before we dive into the details, if you love getting these clear, simple breakdowns of complex financial documents, do us a favor and hit that subscribe button. And hey, we have a fantastic Discord community linked in the description below where we chat all things finance. So what is the big news here? Well, our friends at 5C Lending Partners Corp are doing a big equity raise. They issued and sold a whopping 3,008,709 shares of common stock. The price point for these shares brought in about $76 million in cold hard cash. Now this was your typical public stock offering. They made these sales using what are called subscription agreements. This means investors committed to putting in money to buy shares as the company needed it, they had to give in. Investors at least 10 days notice before asking for that money. This whole deal was done without needing to register it with the big financial watchdogs. They re-saying it falls under a specific exemption, meaning they believe they followed all the necessary rules to sell these shares directly to investors without the usual public filing hoops. Now to give you the bigger picture, as of the date of this report, the company has already issued a massive 7,887,741 shares of common stock. This means they raised a grand total of almost $197 million. That is a huge amount of money being injected into the company very quickly in just one reporting period. Especially we are seeing them bring in $76 million. This tells us the company is actively expanding or funding new projects, and they are relying heavily on new capital to do so. What this also means is that their investor base is growing quite a bit, and for the company it means they have substantial resources to fuel their growth plans or whatever strategic initiatives they have lined up. Looking at the bottom of the report, we see the signatures that make it official. Michael Caster and Thomas Connolly, both co-presidents, have signed off on this filing for 5C Lending Partners Corp. This tells us that leadership is aware and approving of these significant financial moves. Now let's try to put this into perspective. The company is raising a lot of money, and they're doing it through private placements or unregistered offerings. This is a common strategy for companies that are growing fast and need capital quickly. They don't want to go through the longer, more expensive process of a public stock offering. Right away, the key here is that they are reporting these sales as required. Even though it is not a public offering, they still need to inform the authorities about the unregistered sales of equity securities. This is usually done to show transparency and to comply with securities regulations. The exemption they're using, Section C and Regulation D, are standard for these types of private placements. They are essentially saying these shares were sold to sophisticated investors who understand the risks involved and did not require the full protection of a public registration statement. What is interesting here is the sheer volume of capital being raised in a short period, close to $1 that is a signal that 5C Lending Partners Corp is likely in an aggressive expansion phase. They might be acquiring other companies, investing heavily in new technology, or expanding their market reach without going public. Yet it is a way to get funding without the full scrutiny of the public markets. But it also means that the shares being sold might have restrictions on them, and are not freely traded like those on a stock exchange. The fact that they are an emerging growth company means they don't have as many reporting requirements yet, which is common for newer companies. But this also means investors need to do their own thorough due diligence. In conclusion, 5C Lending Partners Corp is aggressively raising capital through unregistered equity sales, signaling a period of significant internal investment or expansion. The rapid influx of nearly $1 indicates a strong push for growth or strategic initiatives. The company is utilizing standard exemptions for these private offerings, which is typical for evolving businesses. While this rapid fundraising can be a sign of strength and ambition, investors should be aware that these are unregistered shares and hence may have limited liquidity and different trading characteristics. Furthermore, as an emerging growth company, further investigation into their overall financial health and strategic plans beyond this filing would be prudent. It is a bold move and certainly worth keeping an eye on to see how this capital injection translates into tangible business results for 5C Lending Partners Corp. Alright, that is our breakdown of 5C Lending Partners Corp. Its latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.